welcome everyone to the 19th ATC Tape Reading Podcast. My name is David Torres, and I've been a longtime student with ATC. A couple announcements before we get started is we have a free chat room link below that you can access that'll give you access to night reviews, and it'll also give you access to free exclusive content, and all new members currently get our 1 through 4 setups. And do take advantage of those because the structure of ATC is definitely going to change moving forward to the summer as well. So those are all limited time, resources that you can access that are not going to be readily available moving forward. They were free for a limited time, probably extended a little bit, but nonetheless. So it's my pleasure to introduce Rich Lepis, CEO, founder of Ahead of the Charts. Rich, how are we doing? It's been a few weeks since we've had a podcast because we had classes, but excited to be back.
Yeah, how we doing, Dave? Good to be back. I know we had our last 2 weeks, we had our classes and just the amount of content that we had coming out. We kind of put this a little bit on the back burner just because, there's only so much that we can actually retain.
Yeah, there's so much content put out there. And then the students just really need to hone in on the class aspects. So glad to be back, but we're kind of transitioning into a more of summertime trading I've seen out there. I mean, the trades have definitely slowed down a little bit. The market's starting to transition a bit. So the focus of this podcast is really going to be on our adaptation mindset. It's going to be really how do we focus our mindset on summer trading and how to really transition and maximize the most out of summer trading. So how do we go about maximizing our trading during summer periods, and why is it so important to be analyzing the changing market conditions?
Well, the first thing is we have Memorial Day coming up. And
Yeah.
Memorial Day, I'm not sure if everybody knows, but the Hamptons open up. Okay. And that's kind of always been the signal within the market is that's when things are going to slow down. You're going to see a lot more of assistants trading for for the actual traders themselves. So you're going to see a lot less volume. And it's interesting because a lot of people have been, they ask me every single year coming in, it's, if trading is harder. The answer is not even close. It's the same. Okay, the prints are not going to change. The way that they're going to go about things aren't going to change. There's just going to be a lot less. We talk about 80% of the time we're looking for prints, and then about 20% of the time we're actually trading them. You're going to be going down to the low, maybe 10% of your day is really where you're going to be able to find those entries. So it's something that, we have to understand going into things. But that common, misconception of that trading gets harder, it doesn't. There's just less things out there. So it really takes a lot more focus on honing in on the things that are moving, on the great prints, the great trades or the highest percentage type trades.
So it's really the participation of both retail and market makers that really make it a little more challenging in terms of just sitting there and analyzing whether I feel like there's a lot more being patient in the summer rather than I feel like during high market volume times you can come in for an hour and accomplish a ton, but more so in the summer you really have to be locked in on finding those very few limited trades that are high percentage. So how do we?
It's more of the overall. Because when you think about summertime, you can't put it to a specific trade because you're still going to have those trades that have great volume that don't follow the market that are going to do exactly what those trades show you they're going to do in the first place. But like I said, there's going to be a lot less of them. And I know, one of the big things that people do, they love to trade name brand stocks, your AMD, your Facebooks, your Apples. You're going to see a lot less trading going into those stocks. And a lot less trading means that the things that it shows you, they're going to take longer. So when you would normally be in a trade, let's say a perfect trade shows that you would be in it for, I don't know, let me make up a number, 30 minutes. At this point, you'll be, lucky for it to even, really start making its move within that 30 minutes. You could expect it to be 40, 45, 50, take longer for things to happen. And that's just because the less volume. Retail trading is at its lowest, and this is, there's a bunch of studies out there. You could just Google it and find, read the different ones, but retail trading is at its lowest when children are home from school. And think about it, when you have something that's taking up all your attention, how hard is it to trade when you don't really have that focus? So you have a lot more retail that's not constantly going to be trading the same way that they are during school months. So what happens is that the market makers, it takes them longer to take shares from people because there's less, there's just a lesser pool of shares out there to be able to take. So that, once again, it goes back to, you see a lot of trades that are going to be taking longer. So it spikes that patience. So it has nothing to do with the game plan of what the trade is actually going to tell you. It just has to do with the patience of allowing that trade to work.
And what are some common themes that you see since you've been teaching students for quite some time now? I'm sure you've seen the cycles of students during high volume periods and during summer periods. So what are some common themes, maybe not so good practices that students really fall into during the summer that really could be a focus for them to make sure that they're building the right habits during the summer periods to therefore prepare for the highest volume periods?
So the biggest thing is force trades. Every student that I've ever traded, I mean, I'm talking about every student that's became successful, whether they didn't become successful, is force trades. Okay, so what happens is that during a time period like this, it's so much more important to really focus on the highest percent trades. Because the last thing that you want to do is have that perfect 90% trade come out, but be stuck trying to force a 60% trade. And one of the biggest the psychology behind it is that when things are slower, people try to almost lessen the rules. Okay, and they accept things and almost try to not make up things, but see things the way they want to see them for that time to be able to trade. And the problem is that most of the time there really just isn't a trade there. There's going to be afternoons where we sit there and just nothing, not one call out, that there's just nothing going on. So what someone will do, and most students will do, is they'll go to a stock with a big range that trades every single day and try to start forcing things in there. And there's nothing worse than a stock that you start trading and get caught going back and forth that has a big range. Because if you're wrong the first time, it's and it ends up in a consolidation, you end up making 5 trades in this consolidation, getting chicken out 5 different times. And then the biggest problem is if you do this at a later point in the day, there's no way to get back from that because there's just not a trade that's going to be available. So forcing trades is the biggest thing. But another thing that happens is that there's a lot of too much patience. And what I mean by that is that when you see the trade being there, it is very important to take it and not hesitate for a second setup or a third setup or a different trigger. Because you're going to see a lot of getting into trades where, let's say you're 50 cents, away from where your entry is, and then all of a sudden you're going to see volume die. So now the game plan becomes that much more important because when that volume's dead, you're going to see a lot of up movement, down movement, and really just movement that's coming into these charts. And what happens is that it shakes people out. It gets them scared from what their original game plan was. So that first trade, those first triggers are so important when it comes into the summertime and early. Because there's not going to be better volume. It's statistically speaking, you're not going to ever, for most of the summer, it's going to be very rare you're going to see better volume coming in the afternoon than you're going to see coming into that morning time. So it's so important to utilize that morning time. And as we talk about all the time, your first trade, you don't want to start off the gun taking a 60% trade for your first trade of the day, because there will be an 80%, an 85, and 90% trade that comes out. So it's a lot more kind of the aspect of kind of that patience of waiting for the right stock and the right percentage trade from that right stock, and making sure that you take it when you see it and not waiting for it to continue on and try to make that trade at a later point.
I feel like summer can expose students in certain aspects of their trading because I feel like during high volume periods, you can get away with taking 1, 2 shakes on some stocks and then later finding something else that'll just wipe out those shakes. So just from that perspective itself I feel like you're not going to have those opportunities if you continuously keep taking shakes to have a great high percentage trade that'll come in and wipe those shakes. So I feel like from terms of a trigger standpoint, your entry standpoint, I feel like students are going to start to see that maybe possibly they're getting exposed in terms of their timing aspect a little bit more in summer than they would traditionally in a higher volume period. Is that kind of along the lines of something, a correct idea? Obviously, we haven't really entered fully summer yet, but that's just something that I started to really dot and journal, is if that's a theme that comes up moving forward, or how does summer truly expose traders in some areas or other areas.
Yeah, no, I mean that's absolutely, absolutely correct. Especially, it's going to, one of the biggest things that exposes is your stock choice. Because if you're sitting there and you're waiting for a stock for the entire morning, okay, human nature is to then eventually force something in it. And then taking that shake of something forced, like you said, you just wasted most of the day or most of the actual high percentage moves that you're going to have. So, stock choice is huge when it comes into that. Okay, you want to have something that at that moment shows you we're going to, there's a lot of trades. Your trades are going to take longer to develop, but you want to have them get away from your entry quicker from the beginning. So that volume, another thing that needs to be focused on is that you need to make sure that the trade that you're looking at has the substance to actually be able to continue, get away from that entry so you can let it play around. Because even if the game plan is, let's say $1 away, if it starts consolidating immediately after getting within your trade because you're not trading in the right volume, you don't have the ability to just sit there and let it consolidate 2 cents away. Because that, when any bar out of that consolidation, it's going to be almost impossible to control your loss. So yeah, I mean, 100%, you're dead on.
So that stock selection aspect, what comes to mind is, the everyday type of stocks versus those newer stories that are trading. Maybe they had earnings or they had news, and the volume is going to be a little more, it's going to be higher than, say, an everyday type of trading stock. So you're going in, you're making sure like that's a key focus on really finding those new stories rather than just directing your straight attention to those everyday stocks. I feel like that's a theme in general that you really preach upon us, is do that even during high volume periods, but is that even more important during lower volume periods as well?
No question. You're going to see stocks like AMD that have, over a $5 range that don't trade that day. Where just go into it and start just consolidating and you don't even get, you're going to see ranges shrink. It's another little tip that you can use is, let's say if the stock typically moves on a regular day, it moves $5 on, a summer type day. And when I say summer, I always think after Memorial Day, because once they open, that's when you really see. So even though we're not technically in summer yet, this is really when we start to see summer trading coming in.
Yeah, and I actually had a question about using myself as an example. Recently, these past since like on site and all the focus we've been hitting in terms of just being so calculated, all the data and numbers really suggested sizing was a task ahead of me, and I've recently been doing that in the past month. But also, I start to reflect on the past journals, like at the beginning of the year, that there was so many more opportunities for trades then than there are now. So how do I go about really increasing my size, but also in the summer still being able to have that success? Because it's going to be a little more difficult in terms of the number of trades. So we're really going to have to hone in on those high percentage setups. So if someone is looking to increase their size, or they currently are, they're getting that comfortability in terms of this methodology in their trading, what would your advice to them be when it comes to taking that next step up in size during a summer period?
So the thing is that you can't collectively just take a time period as a day trader and change anything. So if you're upping your shares just because the summer's coming, that you stay there. There's absolutely your percentages. Like I said, the percentage that a trade shows you isn't going to change. It just might be the way that it actually goes about it. So you stay at that point and continue using your data. The only thing is that there will be a lot more trades that are on the brink. And when I say on the brink, anytime a trade's about 70%, it's not a coin flip, but it's not as high as you would like to get. So you also have to understand that, there's going to be a lot of trades that you don't want to use that full amount, because when we up our shares, when someone says that, what they're really saying is the max amount of shares I'm going to use is this. You know what I'm saying? So like, let's say you're from 500. Well, if you up them to 1,000, that's your max shares. So you have to understand something. Be comfortable with not having to take that max. Just because we up our shares doesn't mean that's what we have to do on every single trade. If you look at a giant market maker, they'll trade 100,000 shares sometimes. They might trade 1,000,000 shares sometimes. So you want to try to not get caught. First of all, you don't want to go back just because the summertime's coming.
Right.
Because again, if we were just talking about before, I focus on news stories all the time, because a news story isn't being affected by what's going on, with the Dow or the SPY or really whatever. It could be a dead day. we could get a stock that all of a sudden starts pushing in volume. It's going to work the same exact way that it's always worked. So it is very important to find those type of stocks, but be comfortable with understanding you don't always have to be at that max. So when you're at a 70% trade, or the market, let's say the market's really slow, you're seeing a lot of consolidation, there's not a lot of movement, it's okay for that type of personality of day. Let's say you're at 1,000 shares to go down to 500. Let's say you're at 5,000 shares to only trade 3,000. So, you know, the summertime, yes, you're going to see a lot more, you know, of stocks not really getting that volume and not continuing, or seeing stories that are going to carry into the following day, just because there's not enough retail out there for them really to take what they need for their game plan. But as long as you follow what the rules are and you make sure that the volume is there when you're trading, it's not going to affect it. At the end of the day, it goes down to percentages. What is the percentage this is going to happen? If it's 90%, hit that max without even questioning it. But if it's at the 70% and it's a slower type of day, it's, you know, perfectly acceptable to move your shares down. I do that on bad trading days sometimes. I don't always use the maximum shares that I could use within a trade, because if it's overall really slow day and, you know, and the percentage is there, but the trading might not necessarily be there, well, you know what? I'm not going to not take that trade because my percentage is still there, but I know it might take a long time. Like I said, it might carry over tomorrow. So I'm going to use less in that aspect. Which goes back to my original point. It's so much more important when you see those first triggers, you see those high percentage trades, you need to capitalize, because you might not get it again that day. Now you have to wait for tomorrow for the volume to come back into the morning to really be able to find that again. So, you know, it really coincides with each other.
Yeah, and I feel maybe a little maybe guilty when I started to increase the size. I feel like as if it gets fun once you start to increase size, and I just really want to attack that size even more and even more. So as of recent, I haven't even been in that perception of, okay, this is a 70%, let me cut down that sizing aspect. I still been kind of pushing the boundaries of sizing as of recent. So that's interesting take, and to move into the summer, to be able to accept the fact that, okay, just because I'm pushing these boundaries doesn't mean I can't take a step back and even realize that these lower percentage trades, you can take that step back and reduce that size, even though maybe the personality today is not the greatest in terms of trading, that present the opportunity to hit that max size, but the variables still are the same variables that would be. It's just kind of a personality of day type of thing. So
absolutely, or the personality of trading that's going on in that stock. You could have a stock that's an 80% trade, but its personality with the way it's trading isn't great. So even though it's an 80% trade, if the personality is not great, it's okay to go down a bit.
Yeah.
Because you're just managing your risk. And that's really what this is all about. It's not about what we can make, it's about managing what we're willing to lose. And if we always are worried about that, the rest works itself out.
Yeah. And that thought process too is the same variables align over and over. Say something's overextended, it's a psych level, you have multiple levels that haven't built properly. Those variables are still the same to align in terms of a percentage of a trade, but that personality of day can have just minimal, no pullbacks at all. So just, I mean, trying to time that aspect would be a lot lower percentage as well. So I could definitely see and visualize how the personality can really impact, and especially moving into the summer as well, really impact that sizing and that share sizing, especially even going to the afternoons as well.
See, I see people like when I speak to people about the summertime trading and stuff like that, students, friends, doesn't matter who it is. It's almost like everyone's scared. Like, oh my God, trading's going to be different now, or it's the same thing.
Yeah.
It's just what a slow day looks like. It's still the same trading. Nothing that we know about how trading works is going to change. It's just going to be a lot slower. There's a lot less volume. Less volume basically means it takes longer to build, takes longer to take those positions, takes longer to come to fruition. It's the same thing. So I would never, ever be like, well, the summer's coming up. It's time to cut down shares. Get the hell out of here. You could have the best trade in the world. It could be a 99% trade. Why would I lower my shares for it? Because it's the summertime.
Right.
You know, so as much as we need to understand the variables of what summertime means, it does not change how we're going to trade. It still will be the same thing day in, day out, just having less. So now having less and having less trades available to us, having less volume available to us, it goes back to exactly what we were saying again before, is that we have to be focused and really, stock selection, number one, and finding those high percentage trades that are out of the box almost, that trade is on its own. It's not attached to the Dow or the SPY or the market today or this. It's finding that new story type stock that's, this is what I'm doing right now. Here's my percentage. Now come trade me.
Yeah, and that's something I've noticed as of late is all those everyday stocks just really follow the same personality, and I could see how that could be difficult if you're a new student to try to take a 1 through 4 trade on that without even thinking about the overall personality. It's so key. I don't know if it's just been as of recent or it's just maybe I just finally put the pieces together, but in those everyday stocks, you're just looking at your like 9 by 9, you can just see the personality of day. I don't know if it's just like the vision, the screen time, but I don't even need to look at the SPY or whatever, and I could just see it now. I can be like, okay, this is the personality day is pushing without minimal pull, but with minimal pullbacks on these large prints, and there's not really a ton of off level to show exception type of day, but they're still getting pushed. So you kind of get to that point, and is that something that happens more in the summer where you see like the personality of days just match and continue?
Unfortunately, you see a lot of none of your stocks moving when you're looking at
That's the personality.
coming into the morning. Yeah, it's the same type of deal.
Yeah.
That's why I would say, it's not about the SPY printing here. It's not about this going on. Personality day to me is, I watch at a minimum, I watch 18 stocks. Okay? That's the minimum that I'm ever watching. When you start to see all the name brand ones doing the same thing, well, it's kind of, it's showing you exactly what the market looks like that day. But then you pull up a stock that has nothing to do with that. And that's where the new story type stocks come in. Now, your everyday stocks, you're still going to have great trades coming into them. You're going to have days with volume. You're going to have days without volume. There's going to be more days without volume. So, it goes back to the same type of deal is that it's the summertime. It's not this scary thing that's coming. It's just there's a lot less to do. And that's one of the best things about being a trader is, what? It's 11 o'clock. You've had a great morning. Go do something. Go enjoy the summer. Go out in the sun. Go to the boat. Go do whatever, you enjoy doing. When it's just dead, so there's no reason you have to sit there. Now, I personally do because, every once in a while you have those, afternoons where you get, 10, 15 stocks doing something, you get those crazy days, but you know what? Enjoy it. One of the things about being a trader is we don't have a schedule. Not every day is a great trading day. Not every afternoon is going to be a great trading day. Not every morning. So when you start to see that personality kind of forming and you've already, taken care of business for the day, go enjoy.
Yeah.
That's one of the reasons it's so slow is because everything all the work that they put in up to this point, they're enjoying it now for these next 3 months.
Yeah, the Hamptons, right?
Mm-hmm.
So for me personally, I feel guilty just stepping away from the market. Especially when the market's open, I step away, all I think about is the market. So it's hard to do that for myself. So for people like-minded, how do we maximize the screen time? Are we sitting there listening to previous classes? Are we going around and just setting up game plans? Are we looking at the overall personality of the day? How do we fill some of the time up that is there's moments where you don't have, it feels like you don't have a time to blink when you have to be on top of everything. You have to be analyzing stories. You don't have time to even look at, half the stocks on your scanning screen because you're so preoccupied with the ones you have. So when there are times that are slower, how do we maximize our screen time? Are we still anticipating? Are we still planning game plans? I almost feel like the work needed is going to be far more than it was with the higher volume period.
Yeah, because you know what? It's almost, it takes a lot less work to only have to watch one stock that you're trading versus watch all the stocks that are out there. So I'll tell you what I do. So I'm always scanning. If I'm sitting at my computer and it's slow, I'm rapidly rising, rapidly falling. I just want to see something that starts to trade. So I'm constantly clicking that. And what I do for the second part is I look for trades and I look for prints in a stock that's not really trading right now. So when I'm looking at these prints, I'm not even looking at them as much as for a trade to be able to do something right then, because most of the time you're not going to see the volume and the actual trade. And there's a lot of floating that's going on. But I'm looking for a stock to give me prints that show that it should happen today, but can't, so I can carry it into tomorrow.
And is that more of later in the day, or is that just in total of the whole market day?
It could be as soon as 10:30.
Oh, okay.
Depending if everything slows down and you start to see things just floating throughout. I'm always looking to trade now, but that doesn't mean I can trade now because someone might give me the great prints to be able to follow, But if the personality of the stock is not trading at that moment, those prints mean nothing. They're going to mean something, but they don't help you right at that moment. So what I'm going to do is I'm going to look for those prints that don't come to fruition when they should have, if it was normally trading, and carry it into that next day tomorrow. Because you'll notice that either almost, well, I'm not going to give you a percentage yet, but a lot of the time they're either going to happen going into the close, okay, and carry over into the aftermarket, which the summertime aftermarket trading you're going to see it just dies out, okay, or they're going to end up happening right after the pre-market the next following day. So I'm just setting myself up for the following day while looking for something to give an opportunity to trade.
Yeah.
And most of the time, most of it, the scanning is, you've seen the days, it's futile. There's just no, you click over and over again. It's going to be the same stocks that move like, 1 cent, and that means it's rapidly rising, and you're going to keep getting that. So it's all the other stocks that I look on a daily basis that I'm going to be finding something that shows it should happen today, but because it can't, it's going to be in the near future the next time that we get volume.
Yeah, and I almost feel like just being so dialed into the summer and when things are slower also in some way or shape or form helps you when things are, volume is really volatile and it's going crazy. For whatever reason, to really know when something doesn't have the ability to move, you just have such more of a light bulb goes on when that volume does come in and you do see the now type of prints and the setups. I just feel like you have such a more understanding of those setups. I don't know if that's just like an odd thing that I see or maybe
No, it's like seeing a change in personality.
Yeah.
See a little glimmer come out, in someone's eye rather than them just looking normal. It's that same type of deal because all of a sudden you see, because when it's a situation like that, everything you see looks that same way. So what happens is when one little bit changes, it's your pattern recognition that's coming into it. You see something that changes, it doesn't fit all these stocks that you've been looking at for hours. All of a sudden now I need to watch this.
Yeah. So yeah, that's a great insight right there. Is just into the summer. It's like don't take that summer. I mean, yeah, people go into summer vacation mode, but in reality, it's such a good period to be able to test your discipline, test your patience, and really develop that pattern recognition to understand when something is, slower, when something is floating, or something's adamant, and the market makers are adamant within it, and the retail is there as well. So I think it just gives you both sides of the coin, and I think most people they typically leave when the market slows down if we're thinking about like the fall or what have you, higher volume period is they stay when everything is just super volatile and moving, but when things are settled down, they leave. So they don't really see that aspect of when stocks settle down as well. So and I think this summertime is going to test a lot of students' patience and discipline. So I do really appreciate.
That's a great point because you really, especially when you have to understand what it looks like for a stock to lose that volume, lose that trading type period, to understand what it looks like when it's coming out of it. So the worst thing for a new student is all of a sudden the market's dead to just leave because now you don't know what it looks like when a stock is dead. So what happens is there's days where you're going to get caught watching one of those stocks while the market's actually volatile and end up not paying attention to something that's that's really going on because you're stuck in there. So that's one of the, like I said, one of the worst things that a student could do is just the second the market's dead, that screen time, it's not as important, of course, of this of higher volatility, but it's just as important. I'm telling you, in my opinion, the summertime is the best time to learn how to trade by far.
And why is that?
Because you put a lot more focus into ideas, into what you need to, because there's a lot less downtime. So it becomes that more important for these things, those controlling prints or those off-level prints or the volume. It becomes more important for them to actually happen. And you have a ton of slow time where if you're normally trading throughout the entire market, you can watch classes all day long. Have them on in the background as you're doing your scanning and looking for prints that are going to bring you into tomorrow. And then when you learn something, if you can do it during the summertime, and forget summertime, forget that word. If you can do what you learn in lower volume periods, you're set up so much better for when there's higher volume. You'll be shocked how easy it is in comparison to that point. So it really gives you that kind of litmus test. Did I learn what the lesson meant? Can I apply it when things are slower? Rather than, when the market's just flying, anyone could trade. That's, that's a retail's dream. They click the button, they make money. trading's the easiest thing in the world, but what about the days when it's not like that? So it forces you to have a lot of those days to really apply what you learn and see, am I getting this?
Yeah, that changing market conditions, I feel like obviously students really need to get a grasp of that. So advice to them was just not take summer off in terms of mentally checking out or just staying, if the volume's not there, just leaving. Do the due diligence and understand and be there and develop that pattern recognition when things are slower, because it almost feels like it's conditioning or like a strength conditioning. So once you're off to the race and the actual race starts, it's easy compared to where you were maybe beforehand. So that's some
I
great
always
insight
said,
there.
did I put, so summertime to me is a privilege. When I first started to learn how to trade, summertime meant nothing. It was just, okay, go to work that day. Monday through Friday, when the market was open, it was going back to work. So at this point in my trading career, I think of it, did I earn during the months before summer the ability to do whatever the hell I want for the summertime? And it's something to think about. How many of us, will check out during the summertime, but did we put in the work to be able to check out? Or does that just mean that next January, we're going to talk about the new year coming and this is going to be my year? So what did you do from January up until, almost June now to be able to earn the ability to come in for an hour, trade till, 10:30, 11 and go enjoy yourself? That's the ultimate goal.
Yeah, no, it really, it will highlight that, especially if you just come in for that hour. I feel like if you just set up a sample size of the students that stay during the summer and ones that come in for an hour, the results during those higher volume periods are going to speak for themselves. And
No question.
But already, Rich, do appreciate the podcast and the conversation surrounding summer as we are approaching that kind of market change. So looking forward to having some more conversations about it, and also like traders exchanges. I'm sure it's a topic that's going to continue through students as well. So appreciate it, Rich.
Of course, Dave. My pleasure.
Take care.
Yeah.